Morning, everyone. Goldshore is a fairly new story. It's we acquired the Moss Lake project from Wesdome Gold Mines back in January of this year. Subsequent to that, we raised $25 million in February of this year, and through an RTO transaction, we were approved by the TSX on May 31st and admitted for trading on June the 4th. So very new story, and we entered the market in a time when everybody kind of went on holidays, hadn't been on holidays due to COVID for some time, and the gold market and gold equities really took a hit through the period. Woke up in September, thought gold price is going to start to feel the inflationary effects. Get to Denver, I think I was the only guy there in the hall for most of the time, and it was pretty discouraging. But what we've assembled is, on the Moss Lake project, it is a 4 million ounce historic resource. Bulk tonnage, low grade, is about 1 gram. And we've assembled a really strong group of men and women to get behind this with not only their network, but their experience in this jurisdiction. I've been in this business for almost 35 years now. The last 15 years I've been primarily focused in jurisdictions in Africa, about 11 countries in Africa. So coming back to Ontario, where I was from, I actually wanted some help. I wanted some help both on the jurisdiction and on the network back into the Canadian market. We have one of the largest land packages of any mining company in northwestern Ontario. We're about 130 kilometers west of Thunder Bay on the Trans-Canada Highway. We have all the infrastructure we need, and as I said, we have a 4 million ounce historic resource, but we also have a 20 kilometer known mineralized trend. There's been over 150,000 meters of drilling done on the property historically. We've commenced our own 100,000 meter program, and we're just getting started. It should wrap up in about 12 months' time. And there is some economics on this. There's a historic PEA done in 2013 that was updated by Wesdome in 2020. We acquired the project for $52 million, 12.5 in cash, 19.5 in shares on IPO, and then we owe $20 million in shares on a number of progress payments over the next 4 years, and this will go to Wesdome. As I said, I've been involved in a number of major and smaller companies. I started out as a trader and in the steel business and migrated to Kinross, where the CEO and I started Katanga Mining and took a $25 million company to a $1.8 billion exit to Glencore. Went on to run some other public companies, Rox Gold and Avocet here in London, but primarily over the last 8 years working for private equity clients, both in London and Switzerland. Pete Flindell, who's with me, he's the VP of Exploration. He's been with me on the last 10 projects. We've been together in Africa and Southeast Asia now for a long time. And he is an excited geologist to be up in Thunder Bay, especially when we enter the winter. We've got a strong board. Some of them are here today. Strong board, all made up of CEOs of junior and mid-tier mining companies, as well as 2 Wesdome appointees, and Joanna, who's the CFO of Endeavour Mining. This deal was architected by David Garofalo and myself. David and I had access to this project from Wesdome. And Galen McNamara, who's the chairman, was also involved. And we approached Wesdome, and we were successful in doing a transaction. And we put together a very strong strategic advisory board, again, for the reach of getting the awareness of this project out into the marketplace. This is where we are. We're just northwest of Thunder Bay, about 130 kilometers. But this is a low-grade bulk tonnage open pit operation, very similar to Detour, being we're being about 1.1 grams, Detour being about 0.8 grams, and following in the same footsteps of those types of companies, Cote Lake, Detour, etc. A lot of history on this project. We have a historical copper gold mine on the project called North Coldstream that ran from 1980 to 1992, but there's been quite a bit of work over the period of time in the last 25 years. This is the project, the land package, again 40 kilometers toe to toe with 3 main deposits, a VMS up on the northeast, a shear zone hosted deposit where the Moss Lake resource is, and an IOCG deposit down in Hamlin Lake. Typical historic drilling, we've started our drill program at Moss Lake, and we're seeing the same kind of grades. 1 to 2 grams over 200 meters, 250 meters is kind of what we're seeing. As I said, we've got a substantial infrastructure base already. We are on the Trans-Canada Highway. We've got power, water, rail, road, people. We're within kind of 100 kilometers of a 150,000 person city. We've established our infrastructure on site. We've commenced the drill program. And we let the first few holes run just to see at depth what the mineralization was like. And it's mineralized well down 700 meters. Now you're going to say, well, 700 meters, you're not going to get that into the study, and may well not. But there's lateral extensions, there's extensions at strike, and we're just trying to kind of understand what's going on and make this as big as possible. Because the early drilling on this was only done down to about 280 meters, and they stopped. Typical junior mining. We've taken a comprehensive approach. We've run a complete geophysical survey a VTEM survey over the entire property, and what it illustrates to us is there are extreme extensions and potential for growth to the north and northeast on Moss Lake, and 2 very, very big copper-gold expressions in the northeast and southwest. This is our drill program over the next kind of quarters. We look to get the resource, the drill program done and the resource statement updated by September, October of next year, and we will update the existing PEA in December of next year. The existing PEA is quite interesting. It shows 3 million ounces of input, 15,000 ton a day, 40,000 tons of mining. Has cash costs of $922 and a production profile peak of 350,000 to 400,000 ounces and a 10-year mine life. This is the framework for creating a Tier 1 asset. We need to increase the size of the resource, obviously the quality of the resource, and then the throughput. We're going to be targeting around 30 to 35,000 tons through a plant, and we'll be looking at input of somewhere in the order of magnitude of 7 or 8 million ounces on a 10 million ounce resource. That's our target. That's our goal for the 100,000 meter program, not only to verify the 4 million ounce historic resource, but also to add on to it as well. Those economics, this is the project we acquired, has a $1 billion NPV pre-tax and a $600 million NPV post-tax. Companies like ours trade at about 0.3 times NPV, which would give us a market cap trading range of about $180 to $300 million, and today we're trading at 65. So a lot of potential upside for our shareholders. And when we look at other valuation metrics, trading comparables to our peer group on a per ounce basis, we're not only at the bottom, we're last. And we're trading at $18 an ounce today, whereas the mean of our peer group, all like-for-like companies at the same stage of development with minimum 2 million ounce maiden resources, all close to $45 or $50. So again, on the project economics and on the trading comparables, lots of scope to realize shareholder value over the short term. These types of projects like Cote Lake, like Detour, they transacted for significant multiples of where we are today at that 10 million ounce. And I use Cote as a good example. They transacted for around $75 an ounce at 10 million ounces. And that would kind of put us at about a $700 million market cap on exit. And this is just an indication of valuation, an indication of potential exits, because I'll be clear, we're going to get this to a Tier 1 status, and we are going to look to give a liquidity event to our shareholders. We're going to look for an off-ramp. We are going to look for a partner. I don't have many intentions of developing this into construction and into production. The market simply won't allow us to build a $1.2 billion project. Very, very tight cap structure. We have 20 million in the bank. We have 33 million free float on 116 million share structure. Everything else is held up in escrow. Gets released 15% every 6 months for the next 3 years. So we tick a lot of boxes, whether that's the managements, the land package, the historic resource, the tight share structure, and we have already started. And we're entering into one of the most dynamic gold markets I think we've seen in the last 20 years. So it's very well positioned and a new story. So thank you.